This is our Forex blog for October 19th, 2011. And like most days, we really want to sell the strong or the weakest currencies versus the strongest and buy the strongest versus the weakest. Today, for the most part, you can see the euro was very strong until about 9. The Australian was strong. And underneath the real-time bar-by-bar analysis, which is made up of 5 different tools, 3 of them measure the direction, in this case for the dollar. One of them measures the intermediate intensity of that direction, and the other one measures the bar-by-bar intensity. So anytime you get an 80 or higher level, and if it's red, it shows extreme weakness, green, extreme strength. Underneath that, we have the intermediate time frame, daily, weekly, monthly. You know, on days like this, when you have all time frames down and with incredible intensity, you know, you want to read this by looking at extreme weakness. If just a little bit of strength comes in for a brief amount of time, or even for an hour or two, but it's less than the dotted 80 level, you can see, you know, the previous down wave had more weakness than this, then you're anticipating that previous trend continuing, especially if it lines up with the longer term trends, which today it does. Some days the real-time trend is up, the weekly and monthly trend is down, and you know, in those particular instances, you want to assume that the trend's not going to last very long, maybe 30 minutes to an hour, hour and a half. When all the time frame trends line up, oftentimes trends last for hours and hours, and you have many opportunities to get into that trend and to catch more pips. So the euro versus the dollar was one of the highest probability trades. Starting the day off, the yen had a weekly monthly trend that was actually up. So looking at your chart, euro dollar, you can see this currency was above the hourly moving average. The weekly monthly trend of this combined pair is up, and then you got a pullback last night to the hourly moving average, followed by a sideways range. We pretty much look for 2 different types of entries into our trends. One is a little sideways rectangle pattern, which in this case we have a pullback and a sideways rectangle. When it breaks out, you go long. And the second type of entry we look for is a pullback. You know, after a nice move up, you get a little bit of a pullback. You buy the pullback as soon as it starts going up. Let me bring up our range charts to show even higher probability trades with this. Range charts are based on a certain number of pips per bar. Here's the euro dollar. And you can see last night on the range bar, you know, because it's made up of movement versus time, if the market's just kind of going sideways right here, you have a beautiful sideways rectangle breakout. Notice on the range chart, our intelligent trailing stop got you out pretty much right here, back in here, out with a small profit. You notice each of these, you know, while sometimes only 6 to 12 pips of profit, you know, it's making money. This pullback right here, you're long, out with about 8 pips. Got a decent pullback right here with a loss. Go back along again here, you made 6 pips. If you add up all those pips, you know, there's significantly more wins than losses. Plus, you can also use the fib targets on range charts very well. If you bought this little pullback, most of the time it's going to work its way up to the fib target. You know, and previous day's high is also another resistance area. So that was one trade last night. The Australian also very strong on all time frames. The weekly monthly trend are even stronger than the euro. So, you know, again, you want to be buying the Australian dollar pretty much from you know, 9 o'clock last night until about 2 when the dollar got strong, and then again from 5 to 6. So last night you got this pullback, 50-day moving average right here. You can see a small profit here. You buy this pullback right here, and notice again a beautiful huge move off of that. In at 51, out at 14, you know, for about a 64 pip profit. And a lot of times when currencies, you know, move up a lot, you're usually safer by waiting for at least a 2-wave pullback. So here it comes down 1 wave, here it comes down 2. If you would have got into this trade, you know, went up, came back down, probably would have stopped you out, and then you have a nice little wedge pattern right here too. Let's take a look at this one on the range chart as well. So here's the Australian dollar. Again, this one had a decent pullback last night, and again, waiting for a two-wave pullback is usually safer. So here's the first little pullback. You know, the farther up it goes, the more likely you're going to get a two-wave pullback. Comes down again and goes sideways. You might have jumped the gun and went long as soon as it went over these bars high at 94. Pretty much stopped out near break even. Maybe you would have lost 5 pips. And then you can see it came down and double bottomed right here, so you go long again. Put your stop underneath these bars low. And whenever it goes up, you know, and kind of goes sideways, look at the momentum. The wave to the upside was greater than the pullback wave. You don't know if this trade is going to work, but you should tighten your stop and put it right underneath here. You're only going to lose 2 or 3 pips here if the trade doesn't work. So you lost a few pips there. The market's going sideways again. There's a little bit of weakness, so I would wait. In this case, we have the previous day's high here as resistance. It is about 24 pips away. Alright, so let's say you're along here around 4. Put your stop underneath the low right here. Now if it stalls at the previous day's high, you want to exit half. Here's the next resistance area. So I would exit half of the trade there at 36 or so. We're in this trade maybe around 4 or 5, so we made 30 something pips on the first half. And most of the time, the trailing stop is a good place to get out of the second half. Sometimes it goes sideways and then explodes up like you saw yesterday, and then you know, in some cases you make less on the second half. But the currency meter showed you that these were some of the highest odds trades today. Now the pound also became relatively strong here around 5, but keep in mind the weekly monthly trend's down. So you know, later on in the day, of course, the yen, the weekly monthly trend shifted down as well. You have a lot of weakness here followed by just a little bit of strength, a lot of weakness, even less strength. Very likely to soon, you know, looking for sells in the yen at 430. 430, the euro was quite strong. Now keep in mind it didn't stay strong. It had about a half an hour weakness there. But let's take a look at the euro yen coming up to about 430. Here's 430, and you can see it broke out right here around 10. Trailing stop got you out right here at 30 for 20 pips. And most of the time you're going to, at the upper containment band, want to look to get out of this trade. Here's a major counter trend signal. The big yellow dots are based on 1.5 to 2 days of continuous up movements, and typically, you know, that's where the market starts to stall. So, you know, looking at the euro yen on the range chart, let's take a look at this. At 530, 630, you got your pullback right here, and it came back up and had a lot of strength. A lot of times when currencies have double tops, triple tops like this, once it breaks down underneath the previous day's high, it's a pretty decent place to go short. Sometimes the trend continues down, but most of the time it will go to and stall at the hourly moving average right here at 86. So if you sold this at 18, you made about 30 pips while risking, you know, 6 to 10. And once you're in a trade and you see the weakness keep getting weaker and weaker, you want to stick with it. You know, so you can trade with the trend and also against the trend. Earlier you had incredible momentum on the way up. It came down with a little bit of weakness, went up, came back down, double bottom right here with half the weakness of before. The trend is up, decent place to go long, somewhere around here at 90. Got stopped out here at 08. It's an 18 pip move. And keep in mind you only need 10 pips net per day to double your account every 2 months using very low 2% risk per trade, which means you can have 5 losing trades in a row and only be down 10%. One decent 30 to 50 pip win can, you know, get that loss back. You know, even one of these counter trend trades like that, making 25 to 35 pips, you know, can get back 2-3 losses. You know, so keep that in mind when you're trading. Trade in the direction of the momentum. If it's above the hourly moving average and going up with incredible momentum, if during the pullback you don't see that much weakness, buy as soon as it starts going back up. It's really that simple. You're going to have some losses, but they're always going to be small if you follow, you know, if you have discipline and follow the rules. Small losses, big wins, that's really the key. I'll leave the Forex blog as the last thing so you can take a look and compare your charts to this. Again, the Swiss also was quite weak. You could have also bought the Euro Swiss today and Australian Swiss. I'll just quickly show you those charts. Just illustrating when one time frame trend is very strong and another one is weak. That's the kind of moves that you get, is typically very violently up. You can see in this case, earlier in the day when the Australian was really strong until 7, you have a really nice size move here. Here's a Euro Swiss, again, pretty much one way, from around 60 to 70, up 110 pips. And on this, earlier today when you have a little sideways range, good place to get in. Here is the first pullback trade, and guess where it went? Probably right to the Fibonacci profit target of the first wave up. So you most of the time know exactly where the market's going to stall, and that's a good place to get out. If you didn't buy this pullback right here, when it came back up to the high and you have this nice little wedge pattern up there, another brilliant place to buy with the Fibonacci profit target up here. You're risking, in this case, 10 to 15 pips with a very good chance of making 25 to 30 pips. And really, that's the key to trading. Small losses, bigger wins.